To another episode of the Unnamed podcast. Myself, James Whelan, Managing Director of Barclay Pearce Capital's Wealth Management Team, and Jack Colreevy, who's our Chief Senior Analyst Extraordinaire. Thank you for joining us, Jack.
Yeah, that keeps changing week by week. Maybe we should call it like on the fly or off the cuff or something like that, because we really just, that's how it's done.
Name pending. We've got a couple of, what do you call the gilets?
Gilet.
It's a great day for a gilet. I woke up, I had a smell, there was something in the air. And I woke up and I reached my phone and I saw a Trump photo. Someone had moved the image from whatever Truth Social, whatever he's on, talking about that he was rolling back all the tariffs except for China. China has disrespected us deeply, except everyone else hasn't. Rolling back the tariffs. I've just gone. We are back.
We are back.
It's a day for the gilets. You want to run us through what's the fallout from that?
Well, I think what ultimately made Trump move is the change in the bond market. So the US has a ton of debt, 35 trillion, 36 trillion. Their aim was to get yields down so that cost of debt would go down, et cetera, et cetera. Now, bond vigilantes have come out, they've sold off the market, yields have gone up. And what that means is it's completely against what they're trying to do.
Yep.
So, going back to my sort of basic economics classes and had to sort of think about this. So you've got the current account, which includes the trade deficit and things like that. But then you also have the capital account. And so these need to balance out. It's the balance of payments. So the capital account, if you have a deficit, then the capital account needs to be in surplus. That's loaning money to the countries in deficit. That's buying their assets. That's investing into US bonds. Mm-hmm. So what you saw was there was a huge sell-off in US bonds because to sort of bring that balance of payments in terms of looking towards the future.
Well, that's the best explanation that I've heard so far.
Yeah, I got to work on that.
That's fine. The delivery was great.
But in essence, bond yields, that's where it's at,
yep.
In our sort of opinion. And so he had to take it back because the market was basically selling off the bonds. And
I appreciate that. The thing that made Trump blink was not the stock market, did not care about what was going on in that. It was the Treasury market eventually. And the talk of potentially the Fed coming in and saving the day again, similar as they did in COVID, was preliminary talk, but it was enough, I think, maybe to get some jitters.
So markets rallied massive. We're seeing it right now in the trading day. Bond yields haven't reacted hugely to this news though. So there is still the risk.
I thought that they would have reset, and they have not reset. There's still
no. So there is still talk of quantitative easing.
There is still talk.
And quantitative easing is where the Fed comes in and buys the bonds. Japan's been doing it for years. And so there is sort of the risk there, which is also a benefit in terms of them creating the demand in order to bring the yields down.
All right, so here we go. It's now pretty much going to be, I believe that the future as it looks will look at what happened in Trump 1.0, US versus China. The rest of the world is now in an okay space as they go through. They'll give up whatever they've got to give up so they don't go back on the list, but it's US versus the China again, which is a much more sensible way of doing this tariff war.
Yeah.
So what happens? What's your prediction for what happens there?
Well, I think what you see is just a redirection of Chinese goods into other economies, such as ourselves. So I think you're going to see an influx of cheaper Chinese goods that were set to go to the US come to different economies, and so that'll help bring down prices and inflation, etc.
Okay. Any change to our commodities outlook or anything like that?
No, not at all.
Yep. Okay. What up? Anything else?
No, that's it.
That's it for us. Thank you very much for joining us on whatever this is called. I'm James Whelan, and I've been joined by Jack Colreevy. Stay safe.